Hey everybody, Boris with Forex. Welcome to the Weekly Technicals for January 15, January 19, 2018 for the majors, for Euro dollar, dollar yen, and pound dollar. And the theme last week, the theme going forward is dollar dumping. It is really amazing, in fact, almost beyond belief at how weak the dollar is relative to generally strong growth in the United States economy, higher yields, all the things that you would think would be positive for the currency. And the only explanation that you can have, aside from the usual technical economic explanations of relative real yields, the fact that Europe is now tightening up, the fact that Brexit may actually turn out to be a soft Brexit, and all of the idiosyncratic things that are happening in the G3 universe, still does not explain why dollar yen is at 111 when it should really be 114, 115, 116, given the yield differential. And I think the only answer that makes sense is actually political, not economic, which is that the market is getting very concerned about the chaos in the White House. Although the U.S. economy is performing very, very well, there is concern about the quality of leadership that's coming out of the White House, the stability of leadership, and generally the only time the currency declines when yields go up, when rates rise, is when there is political worry that trumps the rate of return, which is exactly what we have happening here. So it should be very interesting next week, as the momentum that we've seen on a technical basis is so powerful that it's very likely we should have at least some continuation into next week on anti-dollar flows. Looking at the levels have actually moved up significantly. Euro now is 23 on the resistance side, 20 on the support. As we went out to close trading on Friday in New York, it ended at 22, a 3-year high. Dollar yen now 110 becomes the very big magnetic support level to which the shorts are going to try to do their damnedest to gun for on anti-dollar flows. And pound now is on post-Brexit highs, above 37, and free to make a pretty interesting run towards the 140 level over the next couple of weeks. Let's take a look at the charts here and just see how everything shapes up. So here's the euro. This is the daily. No, sorry, this is the weekly. And you see how powerful the weekly candle is. This is a very bullish candle. We come off the wick to end up on the highs for the week. And generally when we have those type of candles, the prospect of continuation is pretty significant. We can extend. Now looking at the charts here, basically 20 through 22 is the shelf from which we fell in 2014, and this 22-25 corridor is the big resistance point. So is it possible that we can peek into this 22-23 zone? Absolutely. But this whole area, and actually let me just zoom out just a little bit more, you can see this whole area becomes a much more considerable technical resistance point, and I think we are probably going to find a little bit of chop here ahead of the 125 area. But still, remarkable at the strong comeback and the very, very strong breakout. At this point, when you're looking at a very long chart here, what you're seeing is a very powerful long-term W bottom and potentially a move now on a long-term basis all the way up to 135, possibly 140, back to the good old days of the 13s, 14s, when the euro was worth almost 1.5 times the dollar. So I think we're at the crux of some very, very important levels. It could take months for us to really develop and explode all those levels. But for now, this 22-25 corridor is going to be the primary challenge for all the euro longs. On dollar yen, the story is quite different. Also, miserable candle. Look at this candle. End on a weekly lows, right at the 111. And now, of course, we're facing the very big support area at the 110s. If you peel back, looking at the weekly chart here, and sort of take a cold, sober look, it's been actually a 110, 114 range. That's really all it's been. It's been essentially that range with a few dips above and below. So we've dipped a little bit above 114 a couple times, and we've taken a gander all the way down to 108s a few times since 2017. But generally, it's been this low volatility trade between 114 and 110. And it looks very much like we were trying to explore it all the way down there. If, however, this is interesting, I think we'll be bullish for dollar, and kind of a turn for this whole anti-dollar trade is if we come back next week and this turns out to have been the bottom. If we do not go any further and we start to kind of base and actually end up green by end of trading next week, that'll be a very bullish signal because that would suggest a higher low. But if we start breaking below here, 110 really comes into view and the shorts are going to want to run it like a dog hunting red meat. Pound dollar, also very, very nice looking, sort of a more rounded bottom. We are stretching above these pre-Brexit highs. See, 135 was the Maginot line on the Brexit level. We peaked up above it. What was this? What is this level here? This is 136 effectively, right? 134, 30, yeah, 136.57. We're now beyond all those highs. We've cleared the move. Cable looks very much like Euro does as well. And when you look at the event risk, cable is the only one that really has any kind of event risk this week. We don't have anything on the majors as far as event risk. It's all calm dollars, which is why I really haven't even looked at the calendar with you guys. But the only event risk that we have is the UK event risk. We have CPI data at front of the week on Tuesday. We have retail sales data at back of the week on Friday, and that's about it. You know, US has a smattering of housing data. None of this is market moving in any way, shape, or form. And Europe has trade balance. Again, nothing is market moving. It's all going to be price driven. No, I take it back. I'm sorry. We may have. No, not really. This is final figures, so it's not even fresh market data. It's just simply an update of old data. So we really, literally, do not have any significant market moving data this week in Europe, except for the inflation data out of UK and retail sales data out of UK. If both of those, we're bearish. The CPI data, I don't think Kathy has a, no, she's bearish both. Kathy is actually bearish both retail sales and CPI data. It'd be interesting to see whether that really weighs on the unit or not. Certainly right now, the big story in cable is the fact that it's trading on a more positive Brexit vibe. There was a round of talks today that I think it was Netherlands and Spain were more open to a softer Brexit idea. And generally, you get the feeling that the Europeans really don't want to have the Brits leave the Union. And it feels like they may be able to come to some kind of terms. Really, if Theresa May just simply gives up on the idea of borders, of just simply open borders, that will solve 90% of the Brexit problems. And I think she probably will. We'll see. The point being is that the market feels much better about the Brexit prospects this week than it's felt in a long, long time, and you see that reflected in the strength of cable. If we get more positive news, none of this stuff will matter as background noise. So, basically, just to conclude, we are at fresh multi-year highs or multi-month highs in some cases. Momentum very much against the dollar at this point, and we're now going to be looking at this 37.40 level in the pound and this 22.23 level in the euro. Yen, of course, magnetic at 110. That's how the week shapes up. I wish you guys the best luck, the best trading. Boris Lotsberg, over and out.